Hey guys, welcome to our March 2022 Dividend Portfolio update. It's been a bit more than a month since the last update and we are finally seeing some upward price movement for this portfolio. Income is slightly more important than price appreciation for us, but it's always nice to see. Other than that, let's jump right in to check out what's happened to our portfolio since the last update. On this channel, I talk about all things finance, wealth building, and how you can achieve the life of your dreams through financial independence. If you want to join me on this journey to financial independence, go ahead and hit that subscribe button. Alright, first, let's take a look at the portfolio's value change. After the Federal Reserve meeting on March 16th, the whole market received a nice pick-me-up, and that's the only reason our portfolio has recovered a bit. I actually have not deposited any more money into this account for about 3 months now, so price recovery is the only way that this account has increased in value. During last month's check-in, we saw our portfolio sitting at $115,819, and this month it's sitting at $120,458, which is a nice increase of $4,639. If we look at the Dow Jones, we can see that the market has pretty much traded sideways for the last month, until March 16th when the Federal Reserve raised interest rates. The markets reacted positively and has been in an uptrend ever since then. I believe we are still technically in a bear market, but I hope this market optimism continues. After that, we can also see that our portfolio dividend yield increased by nearly 0.5%, from 3.93% to 4.37%. Back in January, I consolidated my growth account into the Fire Fund, which reduced our net dividend yield below 4%. It's good to see that we have a yield back above 4%. The goal for this portfolio is to generate 8 to 10% dividend yield, so we are making good progress every month towards that goal. Hopefully within the next 2 months, we can see this portfolio yield jump past 5%. Next, let's look at our annual dividend income. We can see another large jump. Last month, our annual income was $4,553 and it has increased to $5,259. We basically received a $700 annual raise. And we're closing in on the 50% mark towards our goal of $12,000 per year of annual dividend income. We should be able to reach that halfway mark within the next 2 months. Alright, now let's look at our account growth over the last few months. We have been tracking this portfolio for about 8 months now. Because of the market correction at the start of this year, the value has pretty much stagnated, but we can still see we have come a long way. This fire fund started January of 2021 when it was sitting at just $24,000, so the account has increased by $120,000 in a bit over a year. I pretty much shoveled all my available cash into this account last year. I have not deposited any money into this account since December of 2021 because I built up a very large cash position to trade options with. But the market correction over the last 3 months, I have not been able to do that, so I've just been burning through that cash, investing it all into our dividend stocks. I do think I will start depositing money again within the next few months. Perhaps even increase my weekly investments. After that, in the middle box, we can see our dividend growth over time. We have been floating around the $300 mark for a few months now, but we should be able to break through that within the next few months. Make sure you join us next week for our monthly passive income report to see exactly which companies paid us this month and find out our total passive income for the month. We actually got a really big surprise as well. Lastly, we can see our annual dividend income growing at an incredible pace. My dividend account is still technically in its infancy. I look up to those earning full-time incomes from their passive income portfolios. The goal still seems so far away, but I am glad to see we are getting closer every month. So that's the dividend portfolio growth over the last month. Let's check out our stock purchases that made it happen. Starting from the top down of what I bought the most, we have QYLD. I spent $2,813.76 to purchase 144 shares this month. QYLD pretty much stayed in the $19 range last month, so it was a great buying opportunity. The 144 shares I bought brings the total in the portfolio up to 511 shares. This stock does not like to stay in the $19 range for long, and it's already trading around the high $20 range again. Below that, we have RYLD. This stock follows the Russell 1000 index and it has actually not dropped by much. It's been hovering right around $22 to $23 per share, even when it hit its lowest points for the year. I like this stock, but I've not been purchasing as much as I probably should have. I picked up 78 shares this month for $1,757, bringing the total shares in the portfolio up to 433. After that, I picked up 5 shares of SCHD for $368, bringing the total in the portfolio up to 16 shares. I do want to build up a larger position in this stock because it's a quality dividend growth ETF, but because of its relatively low dividend yield, I only purchase shares when an excellent opportunity comes up, like earlier this month when the stock dropped to $73 per share. It quickly shot back up and has been trading around the $77 range for the last few weeks. Next, we have a purchase that you guys have never seen me make. I actually picked up 3 shares of Starbucks because I saw it drop below $90 a share and decided to round out my portfolio at 100 shares. No other reason, honestly. Growth stocks have been taking a beating so far this year, so I picked up 4 shares of QYLG when it entered the low $27 range. Growth stocks have been dropping so fast that I've actually been afraid to pick up any more shares of this stock. I like the dollar cost average, but that does not mean we try to catch the falling knife at every opportunity. I bought these 4 shares close to when the price bottomed out around $26.50 per share. It's currently trading around $29 per share, but my cost basis is relatively high for this position since I started buying it right around the end of 2021 when tech stocks were at all-time highs. Since we are still in a bear market, I am a bit wary of purchasing growth stocks. I'm actually down 50% on some of my positions. But for this stock specifically, now I know that the $26 range is probably the low. I will pick up some more if it ever gets back down to that area. And that's it for my normal purchases. We actually have quite a few dividend reinvestments as well. DIV and SRET were able to purchase 2 more shares each on their own, while RYLD and QYLD were able to purchase 4 more shares on their own last month. And lastly, Horizon Technologies purchased an extra 1 share for itself as well. So all in all, I spent about $5,317.92 on stock this month. Okay guys, now let's finish this update with a quick deep dive into the dividend portfolio to see my top 8 income generating assets. At the top we can see that QYLD has overtaken RYLD for the top dividend payer spot in the portfolio, but not by much. The 500 shares generates about $1,200 annually, so we should start seeing monthly $100 payments from them. And right below that, we can see RYLD, which is also paying me $1,200 annually. I was buying these 2 stocks at the same rate, but RYLD's price has been very stable even in the steep market correction, so I found QYLD to be the better deal. I have enabled automatic purchases to buy $100 worth of each of these stocks every single day to avoid my habit of trying to time the market. I will try to increase both of these positions by 100 shares per month. Moving on, we can see DIV in the 3rd place. I would not recommend people to purchase this stock, but its price actually holds up surprisingly well. It generates almost $50 per month and I just let it snowball on its own. Below that we have NUSI. This stock has built-in protection against severe market crashes like black swan events, but in a normal slow bleed situation like we have been experiencing over the last 2 months, it's terrible. It offers no protection at all and I do not recommend buying this. Unfortunately, I did stack up over 120 shares in this position before I stopped purchasing anymore. It currently generates about $260 annually. Below NUSI is another stock that I do not recommend anyone to purchase, SRET. It is what's known as a yield trap. Yes, it's an ETF and it's filled with some of the highest dividend paying companies in the world, but those are not quality companies in my opinion. I have just under 400 shares at the moment, which generates $230 annually. Next, we have Horizon Technologies. I actually like this stock. It pays out 10 cents per share every month like clockwork, but its price has taken a very large hit over the last 3 months. I'm afraid to invest any more money into it. It's cheap and has a nice dividend, but money is better spent elsewhere at the moment, I believe. The 187 shares I do own generate $224 annually, and is enough for this stock to buy 1 more share for itself every month. After that, we have Starbucks. I rounded out this position at 100 shares and it is my highest paying dividend growth company, even though it only pays $197 annually. This is why normal dividend investing takes so much capital. The yields are generally quite low for usually expensive shares. And lastly, we have Chimera Investment Corporation. This stock is very similar to Horizon Technologies. It was a cheaper option with higher yield, but has deteriorated my initial capital pretty badly as well. The difference is that this stock does pay quarterly, and I currently have enough shares so that it purchases about 3 shares per quarter, which averages out to 1 share per month. I'm not sure if this list will change much over the next few months because I have not found another high dividend yielding stock that I want to add to this portfolio and quickly build a position in. If you guys have any suggestions for some stocks I should be looking at or picking up, please let me know in the comments below. So this month my goal was to get this portfolio back to a 4% dividend yield, and we soared past that goal. So our goal for next month will be trying to get this portfolio to a 4.75% dividend yield and $6,000 of annual income. So that's it for this month's dividend portfolio update. I'm happy to see that our portfolio increased in every metric that we care about. Our cash flow is increasing every month and we're getting closer to our goal. If you guys have any questions, please let me know in the comments below. Thanks for checking out the video, and if you enjoyed it, please consider hitting that like and subscribe button. It really helps out the channel. And as always, thanks for watching, and I'll see you guys on the next one.